FXBros.
Yes, sir. What's up, y'all? What's up? Happy Sunday. We are here. About to do analysis on the Australian dollar. Look at this little music. I'm going to start memorizing these songs. All right. We still have a level from the 11th of May that we haven't tapped into. That's still an area of interest that we could potentially look to take sales from, but for sure, if you're still in buys, that'll be a good target. I would go exactly 67.60 on that. What if I had curly tail? But yeah, like I said, I would definitely look to target this mid range would be 67.60. That would be a good little area for like maximum TP. But anywhere in this zone would be good. Good area. Look to take profit if you still in buys. Zoom out and see how far. Yeah, so we see what kind of price action we have from here. We did sweep highs and all that. And we got price action here. And really nothing until above this area, 69. So let's zoom back into where this last gap, this is from the 11th, see, May 11th, Thursday. So we're going to zoom in and see if we do break through this zone, where exactly can we go and how high. I, for one, see a candle like this on a Wednesday at 8 o'clock in the morning. I know off top that was news. Really don't care what kind of news it was, but it was something, some type of news that made the market react this way. So I kind of cancel this whole move out, and I basically, in my mind, erase this whole move ever happened. And then I connect this small bullish candle right here. I connect this to where this last bearish candle ended. So basically, and if you would zoom out, then you would see what that looks like. So basically, our high, which is here, really only moved, pretty much still swept this high, but it's trending from this. It didn't touch this high. It still did. Still didn't touch this high because this was just a fake out. It's just a news reaction. So I still feel as if this level right here of 68, which I would just go 68 flat, is still like an ultimate level. Price could be trying to reach like that psychological number, that even number, that whole number, whether it's even or odd, just as long as it's a whole number. Market typically likes to reach those levels psychologically, whether it's retail traders or the larger institutional funds with their algorithms. So I I don't even want to. I don't need to mark that. That's just. I already know 68 flat is a powerful number right now. I've been seeing that number pop up for the last shit pretty much all year. We could look at that on the daily. But currently, this is where we are. Let's zoom out so we can see a little better. But I was talking about up here, May 11th. We broke through this area already. See this red dotted line right here? That's where we currently are. And we looking to tap into this area, possibly break through. So to create that, we created a bearish pattern, a bearish structure in the market, continuing bearish until we had our first sign of like a bullish shift was right here, this high right here, I believe so. Was that the first one? Yeah, I think that was somewhat. That would have been the first one, especially after taking out this high right here. But nonetheless, this high was somewhat taken out. And then it created another bullish structure here to take out those highs, consolidated. Tried to break through, but didn't multiple times, like 1, 2, 3, 4 times. And we sold off again, creating that new low, the end of May on the 31st. And that's when we started seeing a bullish pattern, a bullish structure started to build. Let's see what we got on here. Yo. Who we got?
What's up, family? What's happening?
What's happening?
How everybody doing?
We lovely.
Nice.
But yeah, we saw first signs of real structure shift change here at the end of May. And that's when we started seeing this bullish pattern started to really take form, especially with this double bottom that never got attacked. That's powerful right there. So it's powerful on a minor level because it's a 1 hour time frame. But so as you see, markets really started to rip up at the end of this week on Thursday, going into Friday, which I think was, I want to say this was NFP Friday. And then as you can see, market started to retest, not really creating any strong bearish momentum. We had a lot of weak candles on this way down, but it didn't break any strong structure. I mean, this could be structure, and this could be, at the break of that, okay, we bearish, or we starting to show signs of bearishness, but I would really say this would be more of a stronger structure, and then down here would be the next level to really show form that we back bearish, but that never happened. And not only did it not happen, but we continued on our bullish pattern in the morning as London and New York crossed over in high volatility. So, and then you see a continuation in London, and currently we are here. This was another sign of structure change potentially, but it was still just a heavy rejection of news, probably, but nonetheless at this level, the strong level from the 11th. That was the first time it tapped into there since May, I believe so. Oh no, we had to tap in right here around the 15th, but still. And then we finally broke through after struggling here again once more on the 8th. At the end of last week, we finally broke through with a Friday push, and we've been in consolidation ever since on the 1 hour, just kind of hanging around these levels. I still feel, like I said at the beginning of this live, this next zone out the 4 hour should still be tapped and traded into. The market didn't get this high for nothing. It may swing back down, take out these lows, and then pop up on some strong rejection just to tap into the level that could. But I really feel strong that it could tap into this area. And probably look at the 4 hour and it'll seem a little bit more dominant. Yeah, we still haven't had a strong 4 hour engulfing just yet. This was nice, but it wasn't as strong and powerful as we would want it to be. One, yeah, it did create two bearish candles, so that is showing some power as far as the bears, but um, it didn't close damn near nor touch a break below this resistance, this strong resistance we have right here on the bodies. So with it not touching into that area, I still, from this time frame, you could still hold true to buys. And not only that, if you waited and been patient, you instantly get a bullish engulfing on the 4 hour that took you past and broke you out of this first 1 hour zone that we had. And now we're approaching the 4 hour gap that we had from May 11th right here. This bottom was a 1 hour, 4 hour gap. And like I said, the next level really would be the 69 area, especially if we break past the 68 psychological level and we start to show bullish structure. We really just been in space since, where is this going back to? Yeah, we've been in space, man. Bam. February, this is the high of the year, I believe. Well, I know it's in February. Yeah, right there. February 1st and 2nd, that's the high of the year. So that's our next level, but ultimately I was targeting this area. But we still have levels in here. We still have levels in here. But yeah, we got some time for it to reach up there. That's 69.40, 69.50, 69.60, and so forth. We still have a lot of time for market to reach into the area. And right now, I'm starting to notice a lot of weak candles being created on the 4 hours. So that's some signs of exhaustion. Not to say it's a full reversal, but that is signs of reversals. Somewhat you'll see them better like this. Smaller candles, weaker candles, and then you see stronger body candles that you see the move actually getting created. This right here would be a fake out for all these sellers to fake them out, hit their stop loss, and as you see the market traded back into it. And then look at the bearish candles, big body candles, big body candles, big body candles, and continuation, big body candles. So you want to be trading where the volatility, where the volume is, and the candles will show you that. You don't have to wait for nothing. You just wait for the candle to close, because it can be a powerful candle as it's being formed, but then trade back down into forming, some form of a pin bar. And I'm trying to find one like right here. This candle was a strong bullish candle. Trying to fake traders into going long, and then look how it closed. It closed into a pin bar, a real small body candle. The next candle just tanked. So that's why it's always important to wait for candles to close. But that's currently where we are on the 4 hour. The daily, we filled this wick. That was a good little transition into more highs. And with that being filled and the bullish continuation, I feel even more stronger about this level being potentially broken or even just traded into. But we have strong liquidity up here. This market is trying to break this level 3 times on a daily time frame. So if the market had any power to do so, it would need to swing and take out liquidity on the bearish side, which it did. We had liquidity from here, just strong support. Finally took that out, and now we have a nice strong bearish bullish run that we've been on. and it's probably strong enough to continue bullish to take out these highs. Not to say we're gonna get up to the 69 level that I'm ultimately looking for, which will come later. Like I said, this is from February. I put the dates here for a reason, so when we do get here, you remember I had this marked up since February. But yeah, I look at it like, yes, we do have a daily gap right here, so the market can return here, but the market didn't come up here for for nothing. It came up here for a reason, to fill these old fair value gaps, if you will. That's what they call them. Just to find fair gap, a fair value in price. It's always a fair price. As price fluctuates, traders we get enticed into the move, and that's what makes the market move in and out of a fair price. It gets overbought or oversold, and then it typically comes back into like an equilibrium, like an equator, if you will, and finds it's just like a soft spot where it'll chill. And you kind of see that here, with it's not the best level of consolidation, but I still call it that. And, it shows sign of that with a breakout, and then breaking back into it forcefully too. So if we get a breakout to the upside, then this was consolidation box. We broke out, faked out traders on sales, and then broke back strong on bulls. The bull side was very strong, rejecting any level the bears were trying to reach to or continue to. But overall, we are in a bearish market, because I can zoom out daily. And as you can see, I don't need to go back far. This 2021. We're in a bearish market. And just to pinpoint on, since I had a daily up, what we are attacking as we continue, and if we continue on this ultimate bearish trend, because breaking this level will put us back more in a bullish type of scenario, because we're breaking this old support right here, resistance right here. That would be all. This is just still, the bears still in play, because they could not break this level, and then we could tank from that. So the bears will still be in play. So we need to break this level for that, for us, the shift to change, and I guess market sentiment and control. But overall, if we do continue on this bearish move, this is what we're targeting: COVID lows. Down here, 2020 March, market drop for every market. COVID created, a devastation situation in all economies and every market, whether you're looking at the stocks, Bitcoin, futures, Forex, whatever. It all tanked around that same time. So that's pretty much ultimately where we could be heading if we if we continue bearish and break this low of 2022 in October. But that's months ahead of us. What we focusing on is, what can the daily do for the continuation of this week? And how do we know what it can do? Because we're just going to take a quick glance at the weekly. We have somebody jumping on here. Yo, everybody on? Who on? Everybody on?
Yeah, that's me. I'm coming in and out. My phone losing signal. I'm driving.
Right. Yeah, be careful on that road, bro.
I'm just going to the store right here.
But the weekly is looking strong. We didn't have a scenario even to set up for a bullish engulfing. We did get one here, but that wasn't the best setup, and that's letting me know that we potentially still have more probably bearish movement to go, that we didn't set up from a strong support like we would have if we come all the way down here. But like I said, that's going to take months to happen, if that does happen. But nonetheless, we did take out lows on this weekly, and after the bears take out liquidity, or if you look at it from this standpoint, the bulls taking out liquidity for them to push higher, they only going to target the bullish liquidity, which is currently right here. So overall, that's where I'm targeting, and just a safe bet for a number would be the psychological number of 68 cents. That would be a nice ultimate take profit on buys if you still, holding longs, if you still expecting longs to play out. And I feel strongly bullish on that move, even though ultimately the grand scheme of things we are bearish. But on this move, I feel bullish that the market can reach potentially to the 68-cent level, probably within this week, maybe next week.
It's most definitely gonna reach that level. It's been, like you said, it's been playing with that level for weeks now.
For weeks,
And
yeah.
that's where
Since
all the
April.
bears coming in. So if you are bullish, you definitely better get your ass out of there, because I'm coming in. I already got a position, a big one.
I remember you was talking about that last Sunday. You had some at 68. Yep.
I did it 2 weeks before that as well, and it worked out. So I mean, of course, the bulls could break through it, but they haven't in a long time, and that's why all the bears sitting there.
No facts.
But none of it's definitely bullish up into that area,
Mm-hmm.
So,
and even like I was speaking before, like to even turn bullish or to even think that it's bullish, it would have to break above 71. I would say strong 71.60, 71.70, 71.80 in that area. Weekly close above there for us to be like, okay, we probably bullish, because now we just doing a retest off of this little zone right here on the weekly, and then we about to rip back up. But based on the dollar, I mean, I don't know, the dollar looking like they could be turning around on a slick, but overall, with it being, weak as it was, the market, as far as what we trade, Australian dollar, should still be tanking. And the ultimate level it should reach to is the support it created in COVID during the pandemic around March 2020. If it goes past that, then yeah, that's Finding Nemo. You swimming in deep waters, because I don't know where you going after that. Like dead ass. The economy probably gonna be in shambles if it get that low. But yeah, let's briefly pull up the news. There's always some news you could use. We gotta be more mindful. We gotta be more mindful of the daily news that gets released, because we talk about it on Sunday. But I mean, we kind of keep a good notice within the group of news that's coming out. But nonetheless, no news tonight. We got news on Monday night. Westpac consumer confidence. We have the change in the index of June. It's going to be a 7:30 event for the Australian dollar, and then at 8:30 we got the NAB business confidence for Australia. That's it. Nothing on Monday morning for USD, so the algorithm shall play on. Tuesday, inflation rate. Oh my gosh. Core inflation rate.
Let's go, baby.
My gosh.
I think
CPI. Oh, bro, this gonna hit harder than NFP. I think CPI is like really trumping NFP, bro. I've been saying that for the past 3 months.
That's the one as of late that's gonna set the
inflation rate, core inflation rate, month over month, year over year, and the CPI all at the same time, 7:30. Grab your popcorn, put on your comfy pajamas because it's about to be a great movie. It's gonna be a show. Yeah, we're gonna be on that Tuesday morning. I ain't even trip. But be cautious. We do not trade the news. I'm not exciting because we trade the news, but typically if we already in a trade and we up 30, 40, 50 pips, then if the news is in our favor, it'll push it further in our favor, 40, 50 pips in 2 hours. So that's where the somewhat excitement is, but we are fully aware that at 7:30, the market is going to do some dumb shit. So we're not going to sit here and be like, oh, what the hell happening on Tuesday? Like, we know what the hell happened on Tuesday. CPI, that's all I got to say. Next, Wednesday, PPI, month over month. What's the CPI? It's PPI.
Is it consumer price and
Yeah, consumer price index. What's the PPI?
personal or no?
A producer price index?
Yes, yeah.
Consumer and producer, right? That's what I would think. Yep,
Yeah.
produce. Damn, that boy cold. Producer price index. I got that bitch right. All right, bet. We got that coming out 7:30. Then, oh my God. Y'all just might want to just
kick back.
Y'all just might want to kick back this week. This
yes.
If you get into a good position tonight during London, if you up late, or maybe Monday, maybe I don't want to say Tuesday, but Monday, if Tuesday takes you in a further profit, you might just be taking one trade this week. I'm gonna keep it all the way real.
That's possible.
It's possible. Definitely two. But nonetheless, Wednesday, Fed interest rate decision. We're sitting at 2.5 right now.
Is that the one that comes out like around 1 or 2 o'clock?
Yeah, it's coming out at 1 o'clock. There it is.
Yeah, okay.
Then we got the FOMC economic projections coming out at 1 o'clock. Then they have enough Fed press conference. So they're going to talk about what they just dropped on everybody's head at 1 o'clock. They're talking about that at 1:30. And it's not done. Australian dollar dropping the unemployment rate and employment change at 8:30. This is going to be a crazy week. Thursday, you already know what's happening. Our jobless claims and continuous jobless claims and initial jobless claims. And then on top of that, we throwing in a little bit of retail sales. Yeah, bro, this is going to be crazy. And Friday, we got the Michigan consumer sentiment at 9 a.m. Thursday, 7:30, as every Thursday, that news comes out every Thursday. So if you're a news trader, great for you. Yeah, this is going to be crazy. So, yeah, just be prepared for heavy, extreme heavy volume every morning from Tuesday on out this week. And that's big facts.
Yeah, don't reach for anything. Don't force nothing this week. You don't want to get caught up in this madness.
Nah, bro. And I'm gonna go right back to the charts because I'm gonna show you, because you gotta see it. It's the weekly. Let me go to something that's gonna really show something. Let's go to the 4 hour. I know we kind of enter on the 1 hour. We talk about it. I'm gonna show the 4 hour like. On the 4 hour, when the news gets released, you're gonna see shit like this. A big drop like this, and another reversal. You're gonna see actions like that. On a 1 hour, it's gonna look like the sell of a lifetime, probably. Maybe not a lifetime, it might look like some weird shit, but nonetheless, you see weird moves at important points in the market. If you see this, but you already from here, you good. This is what you want to be in, something like this on a Monday, Sunday, Monday night. Then Tuesday morning, it takes you into like extreme profit, and it starts to sell off. Then you get another push in the evening for come on. That's what this week could do. I'm not saying it will do, but that's the way it's set up with the news releases. It could do. It could, very much do that. But yeah, like I said, we are very near this zone for the 4 hour. I'm feeling like, especially on Tuesday news release, that could be enough to push us into the zone. Even if we down here, we could retest into this area. I mean, this is nothing but what's 30 to 54. It ain't nothing but what, like 24 pips? It's nothing. Could do that in an hour. That's baby. But yeah, we just got to wait and see, as always. You expecting an engulfing from here? I really wouldn't like it, but I can see it happening. On a 4 hour, we got 3 hours though.
Yeah, that could happen. It'll be nice. But it is a Sunday. But yeah, I can see that happening.
Yeah. Drinking Johnny out the wine glass.
But yeah, I think it'll be a little more. It'll be more bullish movement into that ultimate sell, or it can just continue moving as high as I don't know, just to call something out.
Yeah, what you think? What you saying? What do you see? Got to go to the daily.
Yes. And you got some areas of rejection between 67.60.
I see that right here. Right here.
67.80. Like I want it to reach there before it gives me any type of rejection on the 4 hour. Once again,
67.60 and 67.80. Okay, I like that. I love that. What I see is daily support that got created but broke through, that it could reach to right here on these two daily candles that are closed and open right here.
Yes. Yep.
Then I see the closes up here are rejections for resistance from 4 days up here at the 67.80 area you was talking about. So yeah, I like that too. I mean, we already had rejections 3 times right here, and 4 if you count this wick over here on the daily. So we had 4 rejections from this price zone. So I like that. And that would mean we would break through this area right here very easy if we reach that.
So yeah, it's like now just waiting, and let it play out. For me to even look into a buy, I would want some type of selling to happen and give me a better entry. Only because like if somebody's trading and swinging, you done lost a trade even on a swing. So it's like getting this short-term buy, you'll be scalping, which is not a bad look, but that's just not what we do. So I'll be looking for some sort of sell towards.
The best buy would be Friday during London, and if you could catch an entry, like an impulse entry during New York session right around NYSE open, 8 o'clock, 9 o'clock, during that bullish push, that was the only buy entry. Everything else is just consolidation at this point.
Yeah.
So if you can't look for no buy, I wouldn't even look for no buys till the market retests to the 67.15 to 25 area. Like I would want it to retest up in there and set up for a buy right up in there.
What's that? 67.15
to 25. A
Yeah,
little
that's what I
10 pip
say.
zone.
Yep, I say 67 in that zone, the 67.25 all the way down to 60. Like I say, 67 flat.
Yep.
I would
Flat.
say, yeah, in that zone, I wanted to reach down there and touch and give me a reversal. But yeah, man, right now it's just you could look at the 1 hour and see it's literally going to the right and left. It's barcode. So
Right.
you see something like that, immediately step back, look at the 4 hour. You're like, oh damn, okay. I see we wearing out. You got to
Yep.
step back again, look at the daily and see like, oh my gosh, we are in a bullish move right now, which we seeing that we hitting this area of support right here. So let's see if it forms support. You got some type of rejection to the left, but until we get some type of color change or something like that on the daily, we not even in. We didn't even form support yet. So that's why I say we're still in this bullish movement. But we'll just have to wait and let it play out, man.
Oh, we ain't found resistance yet.
That's what I meant. That's what I meant. Yeah, we didn't hit that area of resistance and reverse. So I'm looking for that to happen on the daily. But then even stepping back and looking on the week and seeing how that closed, you're thinking to yourself, oh man, this was going to be another great week as far as like bullish. I was like, with all this news that's going on, this thing could be easily a crazy pin bar. So we'll just have to see how it plays out. But this was a huge week with news. Especially coming off of last week.
Right.
Yeah, this, don't that's what I said. Like, don't.
Last week was a great bullish run.
Yeah, like, man, when I said in the chat, don't expect a solid one like that again. If it happens, I guarantee you we'll get some of that, but don't expect it. That's when you'll be having that FOMO start kick in when you're expecting certain moves and it don't play out like you wanted to. So you'll be forcing and reaching. As I say, don't reach this week. You might get caught. You will get caught if you reach. Just let it play out and follow the plan. Let this news take you out, like you said earlier. Right. You should be in these trades early. You shouldn't be looking to get in on the 7. For me, I wouldn't be looking in to get in at 7:30 when that news release. Let it pay out for like an hour or two. See what it looks like at 8 o'clock or 9 o'clock, and with the New York Stock Exchange open, and then see what that does, if it's gonna reverse that news release and retest it or just continue going. But yeah, so it's really going to test FOMO, patience. You can learn a lot just by sitting back and just seeing things play out and be like, oh Lord. But there'll be a lot of moves that won't be along with our setup, so you just got to let it flow. It's going to set up for the next weeks and months. So this is big. This release only come out every month, so got to let these play out, man.
You ain't never lying.
But with that being said, if it does happen in your setup with that color change, yes, I will be entering in. That first one gonna be a tester, and then probably
right
like
4 hour close, you're gonna enter a tester. Basically,
I'm gonna enter a tester. Yeah.
Mm-hmm.
Regardless of what happens, I'm going to follow my plan, but I have to keep in mind what's releasing, this week.
Let's take a look at this scenario and break it down right quick. I mean, just to go off a scenario that happened. Look at this. The market moved into this zone. 4 hour engulfing on Thursday on the 8th at 1700 hours. All right, bam. Tester entered. That's closed at 2100 hours. That's when it closed. Let's go to the 1 hour on the 8th, which is right here. Bam, that's when the market closed right here. Did we get another bearish engulfing setup? Only thing I can see after this, we came close to one.
Yep, and so that means no.
I mean, yeah, I feel you on that. But not only was it no, look what London gave us. A sweet, buttery, bullish engulfing. And if we go back to the 4 hour, what happened after London gave us that sweet, buttery 1 hour engulfing.
That's a
it
sweet one.
With a sweet, buttery 4 hour engulfing.
That's a sweet one. So that's what I say, when you see those happen in the prime time of trading, which most traders, they say, that crossover time of
and I was about to break this down.
Yeah. So that's what I'm saying. When you get into something like that, you get into one on a 1 hour, you look at the 4 hour and see what can probably form. You see the flow, you see what it's doing, making higher highs and higher lows. So yeah,
you know what would have got me into this? Or would have confirmed the fact that we were not only potentially going back bullish, but this could potentially form into a 4 hour engulfing based off of how that 1 hour engulfing formed early. Because that 1 hour engulfing formed, I think at on 2100 hours, which is 9 o'clock. I believe so. But what I was getting to was that I look at like lows and the bodies and wick, the lows of the wick and everything. So I look at this body right here, this candle, and I look how our market came right down to this area and did not break through it, did not close through it or nothing. And then you get one final little retest up under right here from this 4 hour. But prior to this, you would have saw this early, probably on the 1 hour. And that's what got you into that first initial 1 hour engulfing. That whole scenario on the 4 hour would have even added more. That would have added more confirmation that we didn't get a continuation of bearish momentum closing below this low and then trying to reach to this low right here. But you can only see stuff like that, which is, patiently, like wait. Bam. So yeah, this closed at 1 o'clock, which was midnight Central Time. And like this would have been the impulse move that would have got you in on that buy, because if you would have looked at it from the 4 hour standpoint and said like, okay, I got a bullish engulfing on the 4 hour that closed at 5 a.m. Let me throw a tester on at 5 a.m. You throw a tester on at 5 a.m. Look at that on the 1 hour. This is your entry right here. You're in a little drawdown. Still not breaking out of this zone right here. Nor are you breaking below this low or coming into this low of these candles. Only thing is you didn't get an engulfing, but based on the impulse move that we learned from Wicks Don't Lie and Raja, you would basically get in on the impulse of this candle breaking this high, because this high already broke this high. So you're already seeing structure breaking bullish. And that alone, that momentum with this large candle closing like this, then you get another breakout, solid breakout of this zone, and then continuation of bulls. Like, yeah, that alone would have got you into that trade. Like I said, it wasn't an engulfing move. So if you getting out there engulfing, you wouldn't have got into this trade. You would have either been in from here or probably from earlier in the week. These are trades that we would have held from like down here. I think I entered off this in the morning, 7 in the morning. I know I got, because it was a weird little situation, but I remember this one because it was coming off of this London engulfing that it was weak as hell. But with a lot of force and volume, we feel wicks, and the rest is history. So if you would have got in here at 7 in the morning, 6 in the morning Central Time, you would have been golden. Stop loss was below the previous low, which is down here. You're good. First take profit probably would have been, well, shit, it would have had to been these highs, which, depending on how you was sitting in the trade, or how you was leveraged, that would have been a rough one to see your, your price come right up to take profit and then start to sell off. Still didn't get any strong engulfings or the color change engulfings we like to see. You had one here, but and one here. But that was more of a retest for the bullish continuation. And like I said, we don't know this until the candle closes and gives us clues. During the night, 7, 8, 9 o'clock, yeah, you like, oh shit, this bitch might tank. This might sell off. And I think I remember that. I remember this. I do remember that because I moved my stop loss to break even. I remember being in this trade. I moved my stuff because I thought the market was going to sell off, and I've been in all this profit. And I was like, fuck it. If I just missed it, I missed it. But then we get this engulfing in London, then the bullish push. And then, yeah, I took profit somewhere up here, somewhere in this consolidation. But
damn, so you rolled that bitch.
Hell yeah, boy.
Damn,
yes.
Nice.
Yes. I was in these buys, and when I saw market was up here, I was good. I was like, bet. I'm just going to see if we can continue to break through this, this 1 hour gap and maybe tap into the 4 hour.
Yeah.
Because I saw we already touched it here, so we have potential to go into the area.
That's the challenge, man. That's the challenge. Like
it is a challenge, but
entering on the 1 hour and
I put it at broke even.
4 hour zone. Yeah.
So
yeah,
it was good money. I didn't want to put it at 10.
Risk free.
Yeah, because I saw it already selling off. So especially once it broke this low right here, once it broke that low, I was like, okay, yeah, it might start to tank off on me, especially going into London. But I was like, damn, London may be one of those alley-oop plays that we always see. Because like I said, all the different banks, they trade with each other per se. They are not challenging each other. They just move money around. Like we the only ones that's in competition. Like these niggas just be throwing plays to each other at the end of the day. It's just money. Like all that other shit, probably within war and all that, that's a whole different story. But when it's money moving around, like, yeah, they know what's going on way before we do. But nonetheless, the fact that it was selling off could have just been that very reason why London took it where it needed to take it from. Right when 1 o'clock hit, it was pre-London. Bam, market started soaring. Once I saw that bullish engulfing, I was like, oh yeah, we good. We are good. I was like, all I'm worried about is if it break this low, and it never did. So once I saw it break out up here, I was like, oh yeah, Gucci.
Yeah, that was a sweet one.
Mm-hmm. But that goes back to what you was talking about, managing your trade.
Yeah, you have to. You have to
versus risk management. It's also trade management.
Yep, and setting where you want to exit at. When you took that order, you was like, okay, you was taking that. I'm sure you was looking at it, you was managing it, and noticed that it went into that 1 hour gap.
And I took out most of my position at that point, like right here. When it got up to this area, I took out most of my position. It was just I was letting the rest, sell off, and I was like, okay, I'm just gonna move it to break even if it continues to, sell off, but it never did.
Yeah, that was nice.
Mm-hmm. Yeah, if I would have, and that's another reason why. I mean, I wasn't frustrated. I don't even want to use that word, but I was just like, damn. I wish I would have just held longer, but I know it would have been even more, not stressful, but I would have been a little bit more worrisome about my position as I see it going against me, knowing I could have took off the whole thing right here, but I was like, nah, I don't want to get into the idea of that because I want to start building on large trends. So when I take out and I still got skin in the game, I feel like it's easier for me to add to that position if I'm already in from this initial buy, this initial entry. If I still, even if I got like 10% of the initial move, if I still holding, I feel more confident in adding to that position, even if it's heavier than this whatever's left here. I feel more confident in it if I just completely got out up here. That's just me. And not only for that, I just like to let the winners run, if you will. And that can involve adding to the position if I see a move like that. And I don't think I added to this, but I could have. I very much so could have. But I was just worried. I was kind of worried about this double rejection that we had from this level. I was kind of expecting it to take out those highs, which it did, and then start the sell off. So I was kind of worried about adding to that, but as you can see now, in hindsight, it worked out. Yeah, we got 10 more minutes for this hour to close. We're gonna wrap up the live. We gotta get the Top Golf. We got a whole booth booked out. We gotta get our golf swing practice on because we got a little golf tournament to go to, man. For the chamber.
Yeah, man, y'all get it in. That's dope, man. I know y'all gotta have a good time. That's fire.
Put me on the video.
I know that was fun.
Put me on the video.
What's
up, everybody? I'm so glad that you're here. I'm excited. Definitely making some gains in the market and
that's
making it all make sense.
But we about to make some gain. Like I'm coming to play, Jay. You already know I got a little competitiveness.
Bro, like Awesome G.
I really want to kind of win something.
Awesome G shit, everybody. This guy right here has been trying to do the most in order to win this tournament.
That's why we're going to the Top Golf so I can brush up on it.
It's not even that kind of party. Everybody is just excited to be out there. I asked some of my colleagues, I was like, what tips do you have to help us do well in this tournament? And they were like, you know what? Just keep drinking.
Wow. So, okay. Yes. Nice. That helps. Yeah.
Right.
Let's keep
that
drinking.
Might help with the
video back on.
It's on.
No, it ain't. Keep drinking, everybody.
For real, that helps.
They ordering kegs. We didn't order our keg in time.
Oh yeah.
No.
That's all right.
We couldn't handle a whole keg though by ourselves.
Yeah, we're not going out there 10 deep. Like some people gonna go.
Super exciting.
That's this upcoming weekend?
No, it's tomorrow.
That's tomorrow.
Oh, so when is Top Golf?
Tonight. We got to go brush up on our skills.
All right. Yeah.
Skills that we don't have. Let's be clear, everybody.
Bought a glove. We got balls from the last estate sale.
Our estate sale client gave us expensive balls, tit leased. He gave us hella tit leased balls, brand new in a pack.
Yeah, so we could.
Let me get up. Y'all don't understand.
But yeah,
that's like the brand.
Yeah, I was surprised. Like when I saw them, when we pulled them up, I was like, not even that. When we went to Academy,
I'm just gonna show y'all.
They not like
these
they
balls
not
are
cheap.
so expensive. He gave us.
They not cheap.
Remember I used to work at Academy.
Oh yeah, you sure did. I forgot about that.
They didn't let the regular workers sell in there. Golf is the most expensive sport. So
man,
and it's not even equipment.
Bro.
It's just
them down you want to buy some expensive khaki shorts? Go in the golf section.
That's a fact. They comfortable. You can play basketball in them.
I got some, but I see. I'm gonna put y'all on the tip. Everybody be sleeping on the thrift store. We went to Goodwill and they had some PGA Tour golf shorts in there.
Right.
So,
for the low.
Instead of paying $85, we paid $5.
So thrifting is especially out there.
Oh, it's gonna be a lot of footage, so make sure you log on to.
Especially since this is not nothing we're gonna be doing like every damn week.
Who knows? Who knows? We might love it, but make sure y'all log on to 6 Beats. What's your thing? Buy 6 Beats. 6 Beats. What's your thing on Instagram?
It's Buy 6 Beats.
Okay, go. No, it's not. It's 6 Racks a Track on Instagram.
Oh yeah. You're right.
Go on 6 Racks a Track tomorrow and watch the story. To watch our live golf interaction.
Oh, that's happening for sure.
Nah, for
and then I'm always online. Everybody knows where to find me.
Right.
Peak Legacy, or you can find me on Contemporary Current, where it goes down, and we're gonna have a lot of fun. We're documenting everything. I might even go live from your page.
No, we're gonna go live from your people actually come on your page.
I know, but I want to
go
live.
We're gonna go live.
Page.
All right, we're gonna go live on both
pages. Yeah, because we're gonna have a whole golf cart, everybody.
It's gonna be a rare event to see people.
Yeah, they're giving us a cart, our own cart. He told me he's driving, but
that's what's
it depends on how drunk I am. I might drive as well.
Y'all gonna have a good time, man. Y'all gonna have a good time.
Hey, for real.
Hey, look,
it's gonna be lit, bro.
We're gonna get some more followers. We're marketing. Bring those FXBros cards. Those FXBros cards are getting handed out.
I wish we had that. That'd have been dope to have an FXBros golf shirt.
It's all good. Like, don't worry about it. Like,
that's next time.
That's more. Oh yeah, that'll be more
next time.
Yeah, because we're dealing with people with high level accounts and they ain't ready to spend it. So let's bring them into the fold. Let's turn this up. 2023. We're not playing no games.
No, thanks. I'm gonna go fuck around
and
get
all.
Some more stick sale clients.
I told him, I was like, get me on your lives. Hey, bro.
At the golf
hey, brother-in-law. I said, get me on the live. I'm gonna turn you up.
No, that's what's up, man. I appreciate it.
For sure.
Energy.
Man, I don't know if it's past 30, but I know it hit 30.
Man, that's what, man. Let's get a round of applause for that, man. Like, for real. I really appreciate that. Let's get a round of applause in here, man. Let's go. The website is up, fx-bros.com. yes. No, that's what's up, man.
Yeah.
This is all organic. Organic. I was about to say
videos and content like this, like it's gonna help. It's gonna help the growth even more. Like,
let's do it.
We giving good content on these trades, and like I said, as we about to wrap it up, basically, just to sum up what we said overall with this week in general, the news is going to control the market and control the potential trends that you think you are seeing. We've been in a nice little trend. If you look at the 1 hour and the 4 hour, we've been in a nice little trend over the past few weeks. Off of the new low that was created way down here in the end of May 31st, actually.
Yes.
On the 1 hour, we've been in a nice little trend. So what we can't expect and can't fall into is a similar trend of the same size. So just be mindful. We've seen a lot of weird things happen. So if it happens, it happens. But just understand that it's not a situation that happens often that you can trade from. Right. Especially when you got a week that's delivering heavy news like so.
Yeah. In other words, it won't be bad to not trade this week, even though they have a lot of.
I was just, bro. Once I got to Wednesday, I heard the news on Thursday. Once I got to Wednesday, I was damn about to say, this might be one of them weeks you kind of want to just trade lightly on your wrist.
Yeah, sit
Just
out.
trade
Or
like on
to
your
be honest, like what you said, bro, like you can probably enter a trade today or tomorrow, probably late going into Tuesday, what have you, and ride that trade out. Whether that sucker take you to the promised land, to those highs, or it takes you out break even, or take you out wherever your stop loss was set at, and just be done for the week, because you don't want to get back in off of what's going to happen throughout the rest of the week.
Put it like this. If you want to look at structure and how news and fundamentals and technicals all pair up, if we continue to get bearish news and we raise our interest rates again when the interest rate interest rates when that come out, if we raise that again, expect the market should rise. Because the Australian dollar should rise. We're looking at the Australian dollar against the USD. So when you see the market going up and going down, that's the strength of the Australian dollar. That's the strength of the Australian dollar. So every time you see the Australian dollar go up, go pull up the VIX and go. I don't know if it's the VIX or just the US dollar index, and that market, you should see that market going the complete opposite of what the Australian dollar is doing, because we are trading against the Australian dollar. The USD comes second in the currency pair. Now, looking at the charts, we've been on a nice bullish run. We would think tapping into these highs and are setting up for a nice scenario for a bearish sell-off. Like, we got a lot of liquidity, a lot of areas to reach, clean traffic right here. I think that was it. No, we got more. So if I zoom out, was that it? Yeah, that was it. May 31st.
I really think there's going to be a bullish week, bro. Another bullish week.
So, and not to say they expect it, but let's just see how the market plays out. If we get a bullish week on the Australian dollar, then we should see some negative news on the USD. I'm not saying it's going to actually work out like that to the T, but that's how the fundamentals should play out with the technicals. Because if the dollar produces weak news, negative news, then the dollar becomes weaker. That means the Australian dollar becomes more powerful. So that means the market that we look at currently should continue bullish.
And it only makes sense, like we all know what's going on economically in the U.S. So we have a good idea on the news releases, and as far as like the conferences, like they come out there and say some crazy bogus stuff, we can't control that. But if they follow what they said they was going to do starting this year around March or whatever, then yeah, it's gonna be the same thing, and we go get another bullish run. And this could go to that 68 level. It could possibly reach that.
Oh yeah, easily.
Yeah, so we go see.
I mean, I'm even thinking up here to 69. On a next week, next month type level. But just put this in the back of your head when we about to close out. But just think about this low right here. What if this low was the low for the bullish run that the economy is about to prepare for? Because if y'all been watching the stock market, a lot of the different stocks been having a nice bullish run lately. So what if this is the preface to the bullish run of this market type shit? Because we already had bearishness from just overall weakness in both markets. Because the US dollar is stronger than the Australian dollar, but when they both weak, you're gonna see a market sell off. But if we see a bullish push, that's only showing that one side of this pair is showing a side of relief, especially with this strong bullish run that we did. But we can't see the future, and it would only be confirmed until we break out of, like I said, overall, I got to dip down here, till we break out of this area. Until then, you know, we still pretty much in this bearish territory right here.
Yeah, man. Like, this is another rally. This is another bullish rally.
All right.
Not another, but you know, this is a bullish. It's just gonna be like that double. It's like a double dip. It dipped in the beginning of the year. This is a rally. This will go back down to close out the year and give us a little push around the holidays, like it always do. But yeah, it's gonna be a nice little bullish rally. We're gonna get some of that. But yeah, man, we'll see how it play out.
We'll keep in touch in the chat. We're gonna wrap this one up. See y'all in the morning, 6:30. We'll talk about it and see how London took this. See if we're taking it to new heights.
All right, man. Everybody be good. Yeah, man, take it easy. Be careful out here on these markets. It's gonna be a wild week, but let's get it in, man.
Congratulations on your run, on your marathon too.
Yes, sir. Congratulations, bro.
Appreciate it, man. Getting
we
back
celebrating all wins over here.
That's it.
We celebrating all wins.
Got to. But yeah, man, y'all work on that swing. Get that win tomorrow, 6, and yeah, man. I'm definitely gonna be tapped in the story. So.
Okay. All right, brother.
All right, man.
Peace out, man.
Peace.